Welcome to Scalpers University, Module 3, Lesson 3. This lesson is part of the price action series and it's on liquidity. So liquidity is a misunderstood concept in markets, and probably the biggest misconception that people have is that liquidity is essentially what people think of as volume. Liquidity is totally different, but it's easy to see why they get confused, and in this video I'm going to clear all of that up and give you some practical advice and actionable strategies to measure liquidity, to find where liquidity is going to be, and how to trade in and out of liquidity areas. So we'll cover what liquidity is. We'll go over the difference between volume and liquidity, different ways that you can measure it, and how you can spot where resting liquidity, which is a concept that we'll explain as well, how you can spot where resting liquidity is on a chart. So for liquidity itself, just as a definition, what is liquidity? It's the ability for a market to facilitate a coin being bought or sold quickly without significantly affecting the price. Right, so what that means basically is if somebody wants to place a relatively large order on, let's say, Bitcoin, which is the most liquid of crypto assets, if somebody wants to place a relatively large order on an exchange in a short period of time, how much impact will there be on the price overall? If somebody wants to come in with a relatively large order, will it push price down 0.5%? If they're selling, or 1%? Will it push price up if they're buying? Or is there enough liquidity on the books, meaning the order books, are there enough people with orders set to absorb that relatively large buying or selling? So liquidity is not something you can really see. There are methods, which we'll talk about, where you can get a bit of a snapshot or a glimpse into what the current market liquidity looks like, but it's not like volume. And this is a kind of the biggest confusion that people have. So we'll talk about the difference in volume and liquidity. Volume is the outcome. It's what's generated when the market orders are executed into a wall of resting limit orders. And liquidity is at what level and how concentrated or deep these resting limit orders are. So you look at it from a perspective of volume is the outcome. You could say liquidity is the input and volume is the output, would be one way of framing it. Volume can only be measured after the fact. Liquidity, you can measure it to an extent before any move is made. Then it gets down to who's got the best data. Obviously, the exchanges themselves have the best view of market liquidity because they can see exactly what orders and where are on the books. They can also see what's called hidden orders, or methods that large players use to hide their orders. We'll touch on that in a sec. I won't really focus a lot on order books and how to measure liquidity in terms of a retail aspect, because I don't believe it's a game that you can ever win. You're playing with much less superior information. You have basically, you're going into a gunfight with a knife if you're trying to estimate and talk about liquidity in terms of what the whales and the smart money can see. So this is a basic look at an order book from top to bottom. Anything in red is an ask, anything in green is a bid. So an ask is an offer, is a sell order. A bid is a buy order. That basically means anything in green is just, if you imagine you load up your FTX or Binance or whatever and you place an order for Bitcoin to buy it at, let's say Bitcoin's at 21k, you want to wait for it to drop, so you place a buy limit order at 20k. That would go on to this chart here. It would go on somewhere there in correspondence with where you placed it. That plus every other visible order on the books is what creates the order book as a whole. The difference between the highest bid and the lowest ask is what's known as the spread. Typically in crypto, the liquidity on the majors, at least on Bitcoin, Ethereum, the liquidity is pretty good in terms of spread. Generally, you don't have a big gap between the highest bid and the lowest ask. Most of the time on Bitcoin, on an exchange like FTX or Binance, the spread is just $1. You could buy it for 21,111 and you could sell it for 21,112. It could just be as low as $1. Wide spreads are more commonplace in like Forex and other markets, but crypto, pretty good. There's other ways in crypto that they screw you, but the spreads are pretty good in comparison. Market depth is just the totality of what's available on the books. Now, the reason that liquidity is not something worth investing a lot of time into, in my opinion, not in this sense, not in the sense of reading order books, is because the market is so fractured in crypto. On a lot of other markets, or stocks especially, or even indices, say you wanted to trade the S&P 500, really the most liquid and highest participation market for that is to trade the S&P E-mini, so on the CME, the E-mini futures. And really, there's not anything else that has significant liquidity in the market for the S&P. So you can trade one of the largest financial instruments in the world with full view of, volume, liquidity, and the various data points. You only have to look in one area. In crypto, at any one time, you've got FTX, Binance, Coinbase. If you're talking about derivatives, you've also got Bybit, you've got BitMEX, you've got Bitfinex, you've got Kraken, all of which have significant amounts of liquidity. And then you have a host of other smaller exchanges like KuCoin, which have not insignificant liquidity. So to be able to view them all and really get a picture and get an idea of what's going on is very tough. Some people will say, we'll just put together an amalgamated order book. So put together a aggregated order book that shows the liquidity of all of these various exchanges. But the problem with that is you're looking at incomplete data. So when it's all aggregated, you can't tell what's going on each venue, and each venue has its own level of significance. Meaning, if you go to Coinbase and there's a 10 BTC order on the books, that is not the same as a 10 BTC order being on the books on KuCoin. The different exchanges with their size, the participants, the nature of whether the orders are real or fake, it varies between exchange. So it's hard to look at the market in totality and really gain any actionable insights just from order book data. But the concept of liquidity itself and being able to spot it on a chart is super valuable. So we'll continue to look through that now. This is a view of a particular platform that shows you liquidity on an asset. So what you can see here is the aggregation of all the sell orders, the aggregation of all the buy orders, and the levels at which they're placed. So you can see that here we have a low liquidity area. We've got very small amounts of Bitcoin between these levels, making a flat gap. Whereas on the bid side, the buy orders, we've got very liquid in comparison. You've got like 9, 13, 19, 20. So it goes up to 20 BTC of buy orders. We've got 0, all the way up to there. So you've got a very illiquid book on the upside. So that means for this exchange, a relatively small order would push price up much faster than price could go down. So if you are looking through an order book, that's the best way to kind of interpret it. And what you want to look out for in terms of being able to trade and being able to use this data effectively is you want to look for high volume, low liquidity areas and low volume, low liquidity areas, right? So as a trader, as a scalper, you don't want to, it's not bad to know, but you don't really want to be in a high liquidity environment. So what that means is if you see the books are stacked, so if they're genuine, if this was both sides, was the green was filling up most of the square and the red was doing the same, that means price is not going to move very far because there's so much liquidity on both sides that it would take a massive order to push price up or down. So that's most likely when you're going to see a chart that goes sideways on not much move. A lot of people mistakenly believe that when a chart goes, whenever the bar or the candlesticks are going sideways in a very tight range, a lot of times people believe that that's a sign of low liquidity. In fact, that can be a sign of high liquidity because if the price can't move easily between up or down, a lot of times it means that there's too much liquidity and there's not enough people willing to buy or sell. It can be low activity, but it doesn't mean it's low liquidity. We'll get into that in a second. What I want to look for, and we'll do this on a chart in a moment, is high volume, low liquidity and low volume, low liquidity. Those two market conditions are what you want to look out for as a trader. And what we're going to do with that is show you how to trade best around them. Since this is all about liquidity and we should touch on it, I want to flip across to an order book and market data platform called CryptoWatch. CryptoWatch is a free application that you can download to your computer and you can add sections to it. So each of these is a block. I think I can add, for example, here, a split module. If I do this, and I clone it out, you can add more modules like that. All right, so that's basically how it works if you're wondering. But what I've done is set up for Coinbase Pro. All Coinbase, okay? So Coinbase Pro is just the Coinbase exchange where the actual buying and selling happens. So just view it as Coinbase. And we have 4 things. We've obviously got the chart here. We've got the buying and selling. So each of the market orders as they get executed. We've got the depth of the book. And we've got the actual live view of the order book. So what we're looking at here is we're trying to spot a few things. One being liquidity in terms of what's actually live on the books. For any of you watching, the best one for you to use in terms of visualization will be this one. Because you can see pretty clearly that the buy side of the books has more liquidity at the moment. That makes a lot of sense because we're at the time of recording, we're getting very close to 20k, which is a big level psychologically, and generally there should be some more liquidity resting there than there would be above it. So what you can do with your cursor is put it in the middle here at the blue line, and as you drag it one way or the other, it shows you where the majority of liquidity is. So if you can see now that the red is about 71, 69, 71, it's jumping around, and the green is 50, 41. So at this level, if you look on the bottom axis, you can see that between 20,350 and 20,425, there is more liquidity on the sell side than the buy side. You can see now in real time that it's evening up. They're getting close to each other. And if we went lower, you would probably see that the green would flip above the red. And so you can do that for right in as close as you want, or right out. And as you see the trend, that as you go out, as we scroll out, the green starts to outpace the red. So that can really quickly give you an overview of the levels of liquidity that are on Coinbase's books at the moment. So you could say, okay, from what I see here, Coinbase has deeper liquidity on the buy side. Theoretically should mean that on Coinbase anyway, there's more support below than there is resistance above. On this, for the live buying and selling, I make an edit to it. So I go to settings and I go to 0.1 for the minimum amount filter, meaning you only want to see orders that come through of more than 0.1 BTC. So it shows you, for one, it doesn't update too fast. Every few seconds you're getting an order, and it's the more significant ones. If you go lower than that, if you just set it to 0, you're going to just see constant flow, and it can be quite noisy because you're seeing extremely small orders getting placed that may not necessarily mean much. All right, so 0.1 is a good filter. All right, and that's market orders, remember. So the market orders here are getting sold into or bought into the limit orders here. This represents limit orders because they sit on the book. Also why I call it resting liquidity, because they're resting on the books. And then you have the market orders where they come in and they push price up or down into the books with an intention to move it in one direction or the other. Here then we have the aggregate of the order book. Different way of visualizing this just. And you can adjust this to different levels. So I have it set at $5. You can see each interval is $5 of price. You can do whatever you want. If you want to get a wider view of the market, you can go 10, and it shows you all the way down into the 19. You can even go 50, meaning you can see all the way down to 17,000 and all the way up to 23,750. So you can see here on Coinbase that there's much more significant liquidity below than there is above in terms of resting orders on the books. So back to 5. Now, with all that being said, this can help you see a snapshot for one exchange. So in this example, Coinbase. So we can see the levels of liquidity on Coinbase, but it obviously doesn't tell you the market as a whole. You want to then also look at other exchanges, especially ones that are significant, which you can do through changing the settings. You can add, what I would actually do is add another 4 below. So duplicate these 4, put 4 more below and change them to a different exchange. I would probably choose FTX. Choose the FTX Bitcoin Perp here, Bitcoin USD Futures Perp. Because that is, in terms of volume, it and Binance will be the next most significant, but it'll give you a good view of the futures market, because Coinbase is obviously showing you the spot market. Now if we can see FTX, we can see how the futures market is looking in the same levels. The books aren't as deep on FTX in terms of what the data they show you. They show you a more limited range of data, unfortunately, which is not ideal, but what else? Not much you can do. You can see the buying and selling, a lot more of it going on. You notice how much faster this is moving than the Coinbase one. Now we can see the books again. Books here are pretty even, fairly even all the way up. So it looks quite balanced on FTX. And so at the moment, that wouldn't give you much of an insight into what way a price is going to move. But if it's something that you're interested in, it's a good thing to look over so you can get a bit of an idea just of how the market dynamics work. So now I will go to the most important part, in my opinion, which is being able to spot liquidity on a chart with just your eyes. Again, I say this over and over again. The most important skill you can have as a short-term trader is pattern recognition. And it's no different for liquidity as it is for price action. So we want to find a high volume, low liquidity environment or a low volume, low liquidity environment. If we go to the chart, we can take a look here at, let me see, just delete these, don't really need mid-range. I'll leave that one, it's a longer term signal. And what we're looking at here is two things. We have a volume profile on the right. So this is just on TradingView, which you can use for not free. I think you have to get TradingView Pro at minimum, but if you're in any way going to be taking trading seriously, you should have TradingView Pro. I set it to 100. That's the number of bars here. Just give you a bit of a wider view. I think it's standard. It comes as 24. When you look at it like that, it's just it's too chunky. It's not good. 100 gives you a bit more of a room to view. The up-down thing, it's not really I don't know, you can just do total if you want and just give you a nice color. A lot of people do that if they want. The value area, that means the 70%. So the entire range is viewable. The part that's in darker or deeper blue is the value area. That's where 70% of all volume is transacted. That's the most significant. Okay, so a way of looking at that is the liquidity beyond these levels will be less significant. Okay, so as it rises up to these areas, it's either going to find strong resistance and not be able to break out, or if it does get above it, it will move up very quickly, because one way you can spot low liquidity is by looking at the small areas, the gaps on these charts. So for example, if we were to get above the 22,000 level, the liquidity on the previous volume is significantly lower, and we would expect a pretty strong move that would accelerate higher until it finds an area of where there was previously strong amounts of volume. So if we zoomed out to here and we look at it in terms of the chart, you could imagine that if we do break above this 22.5, there's nothing significantly stopping us until about 28. It's quite easy to see on a chart is that when you have these large gaps down, you know, a big capitulation or even a big pump that has no bounce, no retest, that's what I call an area of inefficiency, also known as an area of imbalance, where price moves from somewhere that it's happy to be, moves fast through there and back to another area where it's happy to be. It's typically how markets move. Right? So if we were to break up here, you could expect a pretty strong move up into this area. So that's one way you can spot low liquidity and high liquidity, is using the volume profile, which on TradingView is the volume profile visible range, VPVR. You can also set fixed ranges, because you'll notice that this one updates itself as I change. So it only shows what's in view of the chart. Second thing you want is your volume bars. So that's, again, it's very simple, just the volume indicator on on TradingView, sorry. Shows you areas of high volume, low volume, and the differences in between. So what we're looking for is a high volume, low liquidity area. All right, so if we go a little bit, if we go to a lower time frame, we look at this pump from a few days ago. Take a look here, where we pumped up into this area. So you can see, all right, I'm looking at this pump that occurred here, right?